Welcome to TradeTheMBI.com. This is John. This report is for the 7th. Well, as we talked about in the video before, the MBI white spike, the positive extreme for the fill, and guess what? That's exactly what happened, and miraculously, we didn't even get all the way to the 76, but nice fill back pretty close to it, and of course, finishing right back above that original breakout, just as we discussed. So all in all, just pretty much exactly as expected because we could see that fading short-term buyers and the dip below the negative 13.5, which took place there. You can already see it's becoming a turnaround point, but right at the same point of a DOC spread. So again, there's going to be at best modest, pushback to the upside on that one. There's still going to be some weakness associated with, particularly with that MBI. Magenta fade now below the 33. And even if it dips below the 25, then I would expect that the 76 would break on further weakness. So that's worth noting. And again, we talked about this, the potential of creating a lower shakeout histogram with matching highs. That's perfect recipe. Of course, everyone else is going to be looking at too from the standpoint double top. But with that full steel reset, once we pop back above that 13.5, and potentially if you get that close to the 76, then that's where they trap shorts again and create the same scenario each and every time that forces short covering. The question is whether sentiment changes, and of course we have to look to data to determine whether or not that's significant enough. As you can see from the NQ, slightly behind on that move, still did the same thing. They weren't quite positive extremes, so we expected more of a mid-level fill, which is exactly what we got right there. But now also matching the S&P with the white MBI spiking and the lead up from there. So all in all, I think the reading's pretty spot on for what we were seeing and the preparation for it, and it certainly showed up predominantly on the 50K charts and as well as intraday. It was just fantastic. So again, it is hard not to laugh when I see this because uh, how much more wrong could you be at this particular stage when you know the Fed wasn't changing anything? And look at what you're seeing from that rate decline. So finally, a recognition from the bond market, at least the real players, after they sucker in, the people who just don't get it, and boom, they drop it out and right in the range because I said it should be below 100. There you go. It's not complicated stuff. From an oil standpoint, slight spike there. That's going to, again, have to be modified slightly to keep that from getting out of control, but you're still in this middle range. So the longer it extends in this period, the more absorption you get and the easier it is to maintain. It does indicate, though, that inflation concerns are not done. And they're just not finished yet. Euro, they're doing their best to keep it from breaking down any further. And it's necessary because no matter what the Fed has to do to prop it up, they're going to because they can't afford to break these bottom lines with it, despite how bad things are in the Eurozone, just because it creates too much chaos. And we saw what happened once it broke that 104 before, and I warned that they would take things subpar, and that's exactly what happened. And then they really started to panic. I don't think they want to let it get back to that threshold again because they've already done as much as they can to help prop up European banks and everything else, and that would definitely, they stemmed the bank run crisis that was taking place before, but can they continue to do it? It's not going to be so simple. The interesting part about that is that while these things take place, when you get these kind of pullback, gold filling pretty close to the last of the positive extremes. You get this set. There's the one final one that takes us right down there, and then I think that becomes an attractive opportunity coming up. Bitcoin in that from their pop, not enough to sustain anything. This again mostly was news, and again once things start to settle out, then you get the fill back because buy the rumor, sell the news. So while you jumped in with a bunch of people who were super excited about a breakout, they get suckered into that one, lets the people who bought up in here sell into all that new money, and then they pull it right back down. I mean, it doesn't trade all that different than regular stocks that we see. From an ETH standpoint, it has been much weaker and puts it down towards its 50% in this particular case. Further weakness, likely to just hold around that 50%. You got a rising gold at this particular stage, but pretty weak from a shakeout standpoint in that. So I think it's going to get pretty dicey for them if there's continued selling into that space. So here it was for the 50K. Beautiful run up, positive extremes, going all the way back, and we had the yellow at this particular stage, so that one's just a bonus if you get it. And once it started, it was a beautiful short boom going down, and nice spike again, which would suggest the zero is still in play. Though it was a nice strong turnaround from MBI Magenta at this particular stage, that may be enough to help support it. But as long as orange stays between the red DOC and the cyan, you're in a continuation, which in this particular case probably going to mean a little bit more sideways action. And the idea being that you'll end up with a little higher histogram, and if you move down towards lower price, you'll end up with the equivalent of a double bottom on a higher histogram. And then when we look at the start from the 5K, it began from the pre-market and it just continued to cascade, and even in the early hours was fading. And then as we came into pre-market regular session, then we really started to see the escalation downward. And then once the market opened up, everyone saw that as a good buy opportunity, jumped right back in. And that pretty much sufficed most of the day. And here we are in the post-market. Not a whole lot of action in the post-market right there. We've seen some dips and the pullback, just testing stops as usual. So that's the current read of things at this particular stage. Still quite a few hours before the market opens, but the volatility that we suggested would happen for after the end of June and the fireworks from the 4th of July and that, people think, oh, well, it's so unusual. This happens every year around the 4th of July, so this isn't anything new. But of course, it feels new to people who just can't seem to remember how things work. As always, though, I'll continue to update you on the Skype chat. Trade well. We'll talk again later.